You heard what Ron Barron said. He thinks he wants to get more. He wants to start a GoFundMe page to get some more money to buy more.
He was pushing it hard in the previous segment. I admire Ron Barron. He's obviously a brilliant long-term investor. And I think if you're going to step in Tesla right now, you really have to be a long-term investor, because I think at least tactically in the short term, the stock is now approaching $1,000 per share. And as you've seen many times in its corporate history, it will crack. It will be brief. It will give opportunities to buy it lower. But right now, I think it's extended. Again, if you are a long-term investor, however, one of the things I have been impressed with Tesla over time is as recently as a year or two ago, we were on pins and needles every time they reported their quarterly earnings to see if they're going to meet their car delivery target. And most of the time, they didn't. But I got to give them some cred. Their operational excellence in the last year or so has really been impressive, and this is combined with the continued bumbling of the combustion engine legacy car makers who have been slow to get to the EV market and really bad at execution.
Paul, but let's do it this way. Let's say I want to own the stock for the next 5 years. I'll buy the stock. I won't look at it again. Is that long-term enough for you? Buy today?
Yeah, that's long-term enough, but I actually think you wouldn't buy it today, because I am fairly certain, because this has been the roadmap, plus we have the uncertainty of the economy with the COVID backdrop and their supply chain, that you will get a chance to buy it lower. And I think you will get a chance to buy it lower in the next couple of, maybe not weeks, but months. So, yes, I would wait to buy it.
Is that a call on Tesla, or is that a call specifically on Tesla, or do I kind of hear in there, embedded in there, maybe a larger market call as well?
Both. Because larger market calls, particularly after we've had this enormous run from the bottom, but specific to Tesla, a manufacturing company that did have shut down in key operations for at least a period of time, and an international supply chain, it probably faces some of its own peculiar risks.
Right. Paul, on the larger market, there's a lot of people who are looking at the market, move, and it continues to move higher today. We might have a little bit of a pullback. A lot of people scratch their heads. There's others that say, have I missed the train? Should I get on the train now? Should I wait for it to back up? Will it back up? Is it going to power? Is it going to power higher? What do you think? And not just in tech land, I think there's a real question as to whether you want to be in these high growth companies, which Ron Barron talked about, or whether there's even a bigger opportunity in some of the cyclicals and others that have been unloved thus far.
I'm primarily a tech investor, but what I would tell you in the short term, I would probably bet on the cyclicals or some of the non-tech stocks. And even within the tech sector, the most cyclical of all are semiconductors and semiconductor capital equipment. So I may go there. What I'd like to see to feel more comfortable about not only investing in my sector, but the broader market, is I want to see us get pretty deep into the fall. We have businesses that are open for months, not just for weeks. We have kids back at school, and we make sure that we at least get into the flu season and not have a COVID-2. Then I'll feel more comfortable that this market move, which has been extraordinary off the third week bottom in March, is really going to stick.